The Japanese version of price charting uses a shape similar to a candlestick as a visual representation.
The Japanese candlestick method of viewing charts is one of, if not the, most popular methods of looking at charts. One candlestick shows the open, high, close, and low points of the price at a given time frame. The shadow, or wick, shows the distance between the high and the low. The body of the candle, or real body, measures the distance between the open and close. When the close is higher than the open price, then the body of the candlestick is white. This reflects positive sentiments in the market. When the close is lower than the open price, then the body of the candlestick is black. This reflects a negative sentiment in the market.
There are many different shapes and sizes to the candlesticks, and the patterns they form, all of them with their own special names.
For example, one of the simplest and most popular killer candlestick patterns is called the hammer. This is when the candle has a long, lower shadow and a short body, with tiny or no shadow on top. The hammer is made up of just one candle and is a type of bullish reversal candlestick. We will be covering trend reversals in an upcoming video. Stay tuned to Britt Online Trading Technical Analysis Basics to find out more. Learn to trade consistently. Master the financial markets with Britt Online Trading Academy. Subscribe for more.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.